A weaker market in the Chicago Mercantile Exchange on Friday and new estimates for the crop in the United States. Jerry Gidel has after the USDA Ag Outlook and Jerry Gidel's weekly commentary right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. So, Jerry, on Friday, the markets were weaker for both corn and soybeans. And we have had the USDA Ag Outlook where the planting intentions for corn reached 94 million acres above what the market expected. And there was a reduction for soybeans below what the market expected. What's the reason for that?
Well, I think the uh, producers out there, and even the USDA, the optimism that we've had here recently in the cash prices, and that has been very strong towards corn. And now still there's some uncertainties in South America here and what kind of double crop scenario we'll get out of Brazil, things of that nature. And so the USDA's Ag Outlook numbers, and the one thing that uh, they were kind of looking at is that the U.S. farmer loves to plant corn, so that kind of fits right into the idea that in that. But the one thing that overall the numbers were, two or 300,000 higher in corn and 400,000 less than what the trade was looking for in beans. From there, actually, for early part of the session on Thursday, when those things were released, beans was kind of hanging in there. But as the day wore on, things kind of backed off just because of the wait to happen in corn. A lot of long open interest in that particular market, and even some recent interest in soybeans were hitting the sidelines when the technicals kind of broke down. From there, and it kind of ties in with the uh, overall numbers out there for in 2025's plannings that the USDA had. Now, keep in mind, these are economic outlooks. They're not the producers' attitudes. A survey on that will be coming out on March 31st. And so that will be the first kind of official look at the 2025 look plannings in the U.S. So things can adjust between these numbers and the producers' numbers and their ideas coming on March 31st. But overall, surprisingly, the carryover stock levels on wheat and corn, which had some pretty good weaknesses here, were kind of anticipated by the general trade analysts out there. It seemed like that the investing community seemed to be startled by the fact that there was a 1.95 type of number. Billion bushels of carryover stock projected here. Because normally at this time of year, it's hard to really project any significant changes in your demand structure for the coming year. So if the yield trend is 181, like the USDA had, you're going to have a potential logical number to have some increase in the carryover stock. Now, 181 bushel yields. We haven't been able to get above 179 this last year, 177 a couple years, 2 years ago. So there's still a lot of uncertainty here as to what our final production number will be. But right now, at least, that's the kind of the approach that the USDA has to come at it. In some ways, last year's numbers, as someone pointed out, we're 181.5, and we're now 181 this year. And it's really coming back to the reality, as I keep kind of talking about here, is that really should be looking at the last 10 years worth of or 15 since 2013. The yields have flattened out if you look at any chart on yields in the US, and that's the one I think we should be using. But that's not the way it's done on classic analysis here for agricultural commodities. You have to have at least 20, 25 years worth of data to utilize it. And that's what's caused this thing to be projecting some pretty hefty numbers on yields over the last years in corn. And that beans, maybe not so much. But even the 52 bushel number they used yesterday, or excuse me, on Thursday, was a pretty strong number here with only a 50.3, 52, 50.5 on the last few years here on U.S. Average yield. And so I think that's another feature here. But, the markets uh, it hit the kind of the proverbial $5 mark on the futures there on corn, and the pushed up earlier in the spring on beans, and even wheat got to $5 here last week. Or, excuse me, $6. And so that's maybe that was just the whole scenario. We had to have some profit taking. Longer term, it's tough to after these kind of setbacks to anticipate that we shouldn't find some stability in here because there's still a lot of uncertainty here in the U.S. as to what our yields might be, and also what the final yields in South America might be at this point. We did have some rains in Argentina last week that moved from the south all the way to the north, which was a very positive for that particular competitor out there on production. But things in Brazil still a little spotty, and it's a long ways on what the final impact will be on double crop corn.
Yeah, and for the upcoming weeks, we have many developing stories. One of them would be what comes out of the tariff negotiations. Mexico has come out with several actions extraditing some drug lords, and there was some market talk of tariffs by Mexico to China.
Yes, yes, those are the last few days here that kind of information has kind of popped up here. Yeah, yeah, the drug lord scenario kind of surprised everybody at that point. How all of a sudden they seem to be being extradited to the U.S. From there, you would think that, but unfortunately, right now, President Trump loves to talk about his tariffs, so I'm not sure that that's going to change us between March 1st and now with him stopping that approach. But I do think it will should have an impact, and it might be very short-lived on both Mexico and Canadian tariffs at this point, because there really are some very important tariff or trade partners that we have in the short term. And so from there, the that particular subject is going to be continued to be very important here going forward in the world. He's right now he's in the combination of now the U.S. and the Black Sea situation, along with President Trump is also in a axe approach on his employees here in the Federal Reserve. I'm still kind of wondering how far that can go. To some extent, the decisions and the budgets and things of that nature are really the privy of the Congress. And at this point, they've had a few eruptions from the Senate about certain things, but so far, at least, it hasn't happened. There could be some significant differences here when the courts finally rule on some of his approaches here. So things are still kind of up in the air on all this adjustments going on in Washington. But right now, it's really a big hubbub going on about the U.S. budget and things like that. And then Friday afternoon, we had another blow up too.
Yeah, we have the spat between Donald Trump and Zelensky, and we are not sure what will be the impact on the war. And the war is related to many markets aspects, including the energy prices and fertilizer prices and wheat planting.
You've hit all the highlights there, sir. Good job. Uh, Definitely a very uh, the issues that prompted that particular confrontation or spat, as you mentioned, uh, in Washington on Friday afternoon, were there the whole time uh, for a while, and it's been uh, there hasn't been any love lost between Zelensky and uh, Trump in the first administration, and right now his the approach they supposedly worked out a deal of the U.S. getting access to the rare rare minerals from that standpoint and getting paid for it. But then the combination of getting support against the Russians not breaking any particular agreement didn't go over well with President Trump. So, as to exactly how that's, everybody seems to be optimistic that's going to get to worked out. I hope it is. Definitely, the Black Sea conflict has really went on way too long, and it's hurt both sides pretty significantly at this point. But supposedly, uh, that would be a positive for their output potential out there and be competitive to us. But I think it's still a very important thing that hopefully gets worked out. But right now, it's kind of tatters here going into next week. We'll see how what happens in that world. Maybe there's going to be some other U.S. or excuse me, world leader, maybe France, England, whatever, that comes in and provides some kind of solution to the conflict that's going, or the difference of opinion as to how this peace deal is going to get worked out. But hopefully something happens in that world. But right now, it's adding more uncertainty to the markets, and we've already had a pretty significant setback in both corn and soybeans. And I kind of feel like that hopefully we kind of struggle along here and see what happens here overall between the weather in South America and Europe.
And what do you expect for next week, given that we are going to have a full market week and with these numbers of planting in the US in, uh, what else? Do you think the market will watch a lot of the tariffs and South America?
Yes, I think both of those subject areas will be important. Uh, South America's prospects. As I just mentioned, Argentina looks like they're going to have some stability there, but Brazil's still important, particularly and how they progress on their second crop corn plantings, because really in reality they were little late last year. We're not a heck of a lot further ahead this year on that particular matter here, and that there's some vulnerability out there, particularly if things heat up and temperature wise, and also at the same time continue to have some dry spots right now. Some areas in the Northeast definitely are that way. And also, I think Rio Grande do Sul is still and parts of Paraná are not in the best of shape. Now, the interesting thing, there's not as much double crop scenarios in Rio Grande, but in general here, that's going to be important from there. Also, uh, U.S. demand structure. Monday, we're going to end up having an updated soybean crush. Looks like that the trade's looking from about 210 to 211 million in crush on that one. And on That'll be for January, excuse me. That's still a very positive scenario here at this point. In general, the next focus will be on the March USDA updates and that on there. We'll only be getting demand updates on old crop. Now, by the way, they will not uh, utilize their numbers here for plantings or put together in the S&D on for the U.S. until May, but it'll be out there. Making comparisons of any demand changes that we might have. I kind of feel like that we're still running way ahead of schedule now. That might we've actually slowed down the last couple weeks here going into this USDA report on some exports on the old crop, but in general, it still has some chances that corn and beans uh, exports could be revised up because we're so significantly ahead of our pace at this point. But right now, at least, that's going to be an unknown for us on March 11th. So that'll be our next week's discussion as to how people will be adjusting out here with all the things up in the air. We got a combination of things uh, still way up in the air in the Black Sea, as we know, and also what might be happening in South America. So there's plenty of things to keep the market's attention.
All right. Thank you very much.
Have a good day.